including supporting international monetary cooperation, encouraging the expansion of trade and economic growth, and discouraging policies that would harm prosperity. Addressing global debt vulnerabilities remains a priority for our members, especially for low-income and vulnerable countries. They welcomed the progress made in debt treatments under the G20 Common Framework. They also expressed their commitment to addressing global debt vulnerabilities in an effective, comprehensive, and systematic manner. Here we aim to ensure that the fund remains well-equipped to meet future challenges in line with its core mandate. Many members have told me how trade situation has created significant uncertainty. Indeed, the buzzword was uncertainty all over this week. And indeed, it also carries with it market volatility, presenting real risks to the global growth and financial stability. We should not be surprised that there are trade tensions. And this situation is an opportunity for us all to have a constructive conversations about how we will move forward together. Emerging economies, particularly emerging economies with limited fiscal space, have little room to maneuver to deal with shocks. And even if these shocks have been resolved, there are some lasting impact. So the earlier, the faster that these shocks or trade tensions in this context is resolved, the better for everybody. To produce a very comprehensive report about what's happening in the world.
Ministers and governors agreed on the importance of reducing uncertainty and working together to clarify policies. Second, very important, they recognized that they need to seize the moment to put their own houses in order. And I saw a very firm resolve to tackle difficult and in many cases delayed reforms at home. And I was very heartened to hear from the membership strong support for our work to promote macroeconomic and financial stability, and to do it through robust bilateral, multilateral, and regional surveillance. And I want to emphasize two areas where we will further deepen our work. One, do more work on external imbalances, dig deeper when they could become a source of concern, and provide advice how to address them through policies. Two, continue to scan the financial sector to identify potential sources of instability, especially in the non-bank sector, and provide advice on how best to enhance resilience. I don't want to sugarcoat. We still have quite a challenging time. It is challenging not just because of the tariffs and the uncertainty. It is also challenging that there are other transformational forces in play. Emerging markets, by and large, are generally highly open. They rely on, many of them rely on export as an engine for growth. They are quite active in international bond markets. So because they are highly exposed, the impact on emerging markets is quite significant. Emerging markets have been fantastic in building resilience to shocks. And when I look at the universe of emerging market economies, quite a number of countries have become more agile in their policy making, more mature in how they approach their fiscal and monetary policy. That puts them in a better position. On the monetary policy side, watch pressure side. We are saying inflation is likely to slow down, but watch it and watch inflation expectations. Do what is necessary given the data you have. And very important, allow exchange rate to be a shock absorber. Very much, everybody.
And this does